Kyle, and welcome everyone. Thank you for joining us this evening. I particularly want to thank the panelists, Charlie Kelly and Stacy Crooks and Ellen Russo and Brad McGuire. These are truly experts, and you'll learn a great deal tonight from these ladies and gentlemen. We've just celebrated Thanksgiving, and despite the many challenges we are facing, there is much to be hopeful about and much to be thankful for. And in fact, I see hope out there in the audience as everyone is preparing to go off or have their children go off to college. And that is a hopeful event. Now, this pandemic has taught us new ways of doing things together while we are physically apart. And this annual financial aid workshop is no exception. This is our 29th financial aid workshop, but it's the first one we've done remotely. And I prefer to be in person and take questions one-on-one, but I'm grateful to our panel of experts who've joined us this evening to answer your questions and help you prepare for the better days that are ahead. All of us share a commitment to ensuring that all Rhode Islanders have access to affordable and high-quality education. Today, most jobs require some kind of post-secondary credential, whether a certificate, associate or bachelor's degrees, advanced or professional degrees, or an apprenticeship. Moreover, the workplace is changing. Automation, artificial intelligence, quantum computing. In many ways, the pandemic has accelerated these changes to the way we work. And so we can see the future coming at us more rapidly than we did just a year ago. We need to equip people with the skills and knowledge they need to succeed in this changing environment. In other words, we need to prepare our young people to be lifelong learners. Figuring out how to pay to college can be daunting in this context, but you are not alone. There are resources that help you finance college, and there are people and organizations such as our panelists who can help you navigate the system. Our federal student aid programs, Pell Grants, work study, and student loans provide a foundation for financing college. Now, I've worked to pass a number of important measures to strengthen these programs so they can meet families' needs now during these challenging economic times. One of the areas that I continue to work on is making the application process easier for families. Everyone should fill out the free application for federal student aid, what we call FASA, F-A-S-A. If there's one thing you take away this evening, you must fill out the FASA form, the free application for federal aid. That's what qualifies you for federal grants, loans, and work study. It's also required for the Rhode Island Promise and many financial aid programs offered by colleges and universities. I've also been working to increase funding for grant aid, which is critically important to help students pay for college. The main federal grant we have is the Pell Grant, named after our great Senator Claiborne Pell, who wrote the groundbreaking legislation to establish a grant over 45 years ago. Today, the maximum Pell Grant is $6,345, and roughly 30,000 students in Rhode Island and more than 7 million across the nation are able to afford college because of the Pell Grant. Working with my colleagues on the Appropriations Committee, we have added resources to the Pell Grant so that if you decide to study an extra term in the summer, you can receive an extra Pell Grant. We've also tried to ensure the Pell Grant continues to increase with inflation, but we have a long way to go to keep up with the cost of college. I've also fought to keep interest rates low on federal student loans and continue to push for allowing borrowers with high interest rate loans to refinance them at today's lower rates. Student loan debt is now second only to mortgage debt in the United States. We should not allow these student loans to handicap a young person from buying homes, starting a business, and fully participating in the economy. Nevertheless, as our panelists will indicate, loans are an important tool in paying for college. Now, I encourage all students to only borrow what they need rather than what they can. I also encourage students to use federal student loans first. They carry the lowest interest rates as compared to private loans, while offering generous repayment options and the opportunity for loan forgiveness for public service. There's another avenue to reduce the need for loans, and that is our national service programs like AmeriCorps. For each year of service, you can earn the equivalent of a maximum Pell Grant. And I've introduced legislation, the Action for National Service Act, would expand these opportunities. It would increase the education award so that with 2 years of service, you could earn the equivalent of 4 years of tuition at a public college. We've got to get that legislation passed. And an even more economical way to finance college is to do what I did, and that's enroll in one of our service academies. I was lucky enough to attend West Point. That provides an education and a profession. But there are also ROTC scholarships and post-9/11 GI Bill scholarships, which help serve our nation, help those who served our nation. You should also not overlook the assistance that colleges provide through the tax code. There are tax credits and deductions and savings plans that help families offset some of the cost of college. These investments in higher education have made a real difference to so many people. Now, you hear a lot about schools with very high tuition rates, but there are affordable options, and you should look into those options. For example, students graduating from high school in Rhode Island now have the option to attend CCRI for free. Tonight, we have brought together a panel of experts who can tell you about the range of resources available to help you finance college and how to apply for them. It's great so many people logged on tonight. It seems daunting, but with the help of these experts, you'll get insights that will be valuable as you pursue college and pursue paying for it. I want to thank our panelists tonight. And without further delay, let me turn it over to Charlie Kelly. Thank Charlie and all of the panelists. And thank you, ladies and gentlemen. Good luck.
Thank you, Senator. And as you mentioned, this is the 29th Jack Reed Financial Aid Night. And I think between RISLA's Deputy Director Noel Simpson and I, we've been lucky enough to be involved in all of them. I'd also like to thank you for sort of being the inspiration for our college planning center that we established over 20 years ago. After doing these financial aid nights, we saw the need that people had for the information and guidance to help them on the path to achieving their higher education dreams. So, Senator, we thank you. We welcome you back to the Senate, congratulate you on your re-election. And now we will try to help many of the participants that have joined us this evening, and I wanted to welcome all of them. And before I get into my presentation, I'd just like to tell the participants here who our great panelists are. Stacy Crooks, who is the director of our RISLA College Planning Center with offices in the Warwick Mall in Lincoln. We have Ellen Russo, who's from Providence College Financial Aid Office, and who we know personally as a great expert and advocate for students and families. And Brad McGuire, who's representing the Rhode Island Society of CPAs and his firm Blum Shapiro. And while I'm not a practicing CPA anymore, I'm very glad you're here to answer some of these technical questions. So I'm starting off this evening talking about financial literacy and avoiding student debt. And while it's the first presentation, I'd like to suggest that student loans should be the last part of financing and paying for higher education. So what I'm going to try to do is just an overview of some things that we've learned in the almost 30 years that I've been doing this, and to pass along that hopefully is of some help to all of the participants here tonight. And one of the things is you read in the press so many stories about overborrowing, and then the need for financial literacy. And then we'll get into some of the different loan options. So if I may ask you to go to the next slide, we'll talk about some of those abilities to learn and to avoid overborrowing. Last year, we established at RISLA the Financial Literacy Scholarship. And we have been a big advocate of financial literacy for years, doing seminars at high schools and colleges. But we want to impart financial literacy knowledge both for students and maybe some parents. So we decided to start a scholarship program that every month we give away two $2,000 scholarships to those individuals that log on to the site, read some short passages on financial literacy, and answer some questions. And everybody wins because we tell you the right answer even if you didn't get it. And we give out $50,000 a year in scholarships to promote financial literacy. So you can just find that on the RISLA website or Google Knowledge for College scholarships. Next, please. Here is sort of a laundry list of things, and I won't take up your valuable time reading them all. But as I mentioned earlier, first concentrate on all the free aid that you can obtain, such as the Senator mentioned with the Pell Grant and other grant aid, Rhode Island Promise, things of that nature. Don't borrow more than you need. The temptation is, well, you know, I want a little bit extra. Well, those extra dollars add up, and when you pay them back with interest, no matter what loan program you choose, it becomes very expensive. And a rule of thumb that has been around for quite a while, and it's not one of our suggestions, but financial aid experts across the country, is that students should not borrow more than their expected starting salary. So if they're going to be starting a job at $40,000 or $50,000 over their educational career, undergraduate at least, they should not borrow more than that, both federal and private loans. So the thinking there is on that particular salary, they can handle those monthly payments. And many students apply to many different schools, and they will get, as Ellen and Stacy will tell you, financial aid packages back. And it details what kind of grants, need, or merit, or other scholarships that the school may be offering. And we really try to encourage people to look at an institution that is not just a good academic fit, social fit, but also a good financial fit. Becoming overburdened with student loans or not being able to finish your education at the school you started because of financial constraints is not a good situation. And then finally, interest rates, as everyone knows, are extremely low right now. And we really encourage people, just like you would with a mortgage, to use fixed rate loans, because if interest rates increase in the future, and I was just watching a Harvard Business School seminar on this, projected to increase, but of course, who knows? But when interest rates increase, your monthly payments increase as well. And that can put people in financial hardship. Next, please. So one of the things that we always encourage at the College Planning Center and events like this is that students should first look to federal direct loans. The old days, we called them Stafford loans. You may still hear them referred to that as that. But these are loans that the student can take out in their name without a cosigner or parents becoming obligated. And there are two things that you have to do. One is file the FAFSA form. Now, some people say, well, I don't ever think I'm going to qualify for financial aid, so why should I do it? But even to take out the federal direct loan for students, the FAFSA form must be completed and submitted. And then there are two versions of the Stafford loan. One is the subsidized and the other is unsubsidized. Subsidized meaning that FAFSA data determines that you have financial need, in which case the federal government will not charge interest on the loan while the student's in school and the 6-month grace period after they leave school. An unsubsidized direct loan is one, even though the student and family don't have what the federal government considers financial need, they can still obtain the loan, just that the interest accrues during the in-school and grace period. The loan information and application process is usually pretty much part of the financial aid award letter. It's done all online, and it's the lender is the federal government, and it's applied really sort of through the school who certifies it. The interest rate on this loan is also very attractive. It's 2.75% fixed. As we mentioned, that's a safer alternative, and it has low fees of 1%. And as I mentioned, only the student is obligated on the loan. Next. The loan limits are starting off $5,500 for freshmen, and as you can see, it goes up as they advance through school. Many people say, well, $5,500 is not enough. Well, that's when we get into some of the other options that may be out there for students and families. Next. So there are a couple of different loan options, as I mentioned at the beginning. Back, please. Yep. The first one is the parent loan for undergraduate students. And our usual assumption is that most of the audience this evening involves students starting off college. Yes, there may be some graduate students here as well tonight, so you can just go to the federal financial aid websites to get information and the variations on what I'm going to talk about. But the fixed interest rate on the parent loan from the federal government is 5.3%, and it has an upfront fee of 4.2% that's deducted from the loan proceeds that are transmitted directly to the school. Only the parent is obligated on the loan, not the student. And the amount that the parents can borrow each year is the cost of attendance minus other financial aid that the student is receiving. And Stacy Crooks will talk about what the cost of attendance means and what its components are. And there is no overall borrowing limits for parents, so we do encourage them not to overborrow. Just because you can obtain that borrowing, probably it doesn't mean you should. Very easy to obtain the Federal Plus loan. There's no FICO requirements, no debt to income. You just can't have adverse credit. And even in those cases, you can perhaps get an endorser or a cosigner. Next. There are also nonprofit state-based loan programs across the country, like RISLA's. So say your child is going to school in Arkansas. There's a very nice student loan program down in Arkansas, and you can then sort of have the choice of using theirs or using ours as you're a resident of Rhode Island. These are generally credit-based loans, and if the student, well, really the parent, has a good overall FICO score and credit history, they can probably get a bit lower rate than on the Federal Plus loan, but it may not have some of the same benefits. Other options include home equity loans. And really that determination, if that is right for the family, is really something they should probably consult their tax or financial advisor on. There may be some interest deductibility options available to them, but that is not always the case. And then many banks and for-profit education lenders have programs available, and you can Google them and see which one best fits your needs. Next, please. And a little bit of information about Rhode Island's program. Rhode Island is fortunate to have a good program for higher education. We have excellent educational institutions in the state, and it was very important to the state to have programs available to help both residents of the state and the families of students coming to school here in Rhode Island. So Rhode Island's education loan program was recently ranked second best in the country by Forbes. It has a 3.99% fixed rate for immediate repay, 5.25% for deferred, no fees. I believe it's still also the only income-based repayment plan available as a safety net in the country for other than the federal government. And as a few of us are getting older, we appreciate this one more, that we may need more nurses, so that there's a program to encourage young people to go into nursing, and if they provide direct patient care, here in Rhode Island, RISLA will set the interest rate to 0 for up to 4 years. And Rhode Islanders like dealing with Rhode Islanders, so these loans are all originated and serviced in Rhode Island. And you can get more information and decide what's best for you at risla.com. Next. So a couple of resources, and again, I think Stacy will touch on some of these, but even though so many high school students are studying remotely, their high school guidance offices, school counselors are a great resource. Many times there's resources online or in binders in the offices there where they can find scholarships and grants. There's also this website, rischolarships.org, which is a compendium of local hard-to-find scholarships that I know Stacy and her group have worked very hard to put together. And national scholarships, one of the sites that I like is collegeboard.org. And not only is it a good listing, but they don't sell, as far as I'm aware, your information. There are other scholarship sites out there that do sell your information to credit card companies and all sorts of vendors looking to sell to college-age students. And then if you really need some help filling out that all-important FAFSA or just want some help on guiding your way to higher education, you can call RISLA's College Planning Center or go to cpcri.org to book an online telephone session, because unfortunately we're no longer meeting in person. So that concludes my remarks. I think we'd like to now turn it over to Stacy Crooks, who does a tremendous job running our College Planning Center and has also been out at the colleges, so she knows it from all facets of the higher education spectrum. Stacy, welcome.
Thanks, Charlie. Hey, everybody. Thanks so much for joining us tonight. Before we touch on financial aid, I just want to talk a little bit about the College Planning Center and how we can help you. The College Planning Center, as Charlie said, has been around for over 20 years, 21 years now, and we help students and parents navigate through the whole admissions and financial aid process. From college searches, where we usually help juniors in spring into the summer, to the FAFSA season, the financial aid season, filling out forms where we are right now. So for you who have seniors right now, you are in it, and here is the time to get our help. We will actually, it's a free service, and we'll help you fill out your financial aid forms right over the phone. And by the time you get off your phone call, if you've prepared, well, then your forms will be done. It takes us about a half hour to do the FAFSA form and just about an hour to do the CSS profile, which is an additional financial aid form that some of you may need for some of your schools. And after our financial aid season, we don't stop. We continue to go, and we help students and parents review their financial aid award letters that they get from the colleges once their children are accepted, right? And then after we help you review your financial aid award letters, you're at that point where you're about to commit to a school. And once you commit to a school, you're saying to yourself, how am I going to pay for this now? So then we'll help you really towards your best financial option. So we pretty much take care of the whole enrollment cycle at the College Planning Center, but what you're probably most interested in right now truly is the financial aid and the FAFSA process. What is financial aid? Everybody wants to know what financial aid is. Everyone thinks it's only just free money, but it's not. It's federal loan money, it's work study, it's state grant money, it's money that you get from the college. And the first step to getting all this money is by filling the FAFSA form out. Kyle, can you go on to the next slide? So the FAFSA form, here I say do the FAFSA earlier the better. And I don't want you guys to think that I'm talking about first come, first serve. Doing the FAFSA form, the earlier is always good, but it doesn't mean that you're going to miss out on any financial aid if you don't fill it out by October 1, the very beginning of FAFSA season. Okay, the reason we say the earlier the better is because for a lot of you who are in the process this year, a lot of your kids are applying to more than 5 schools, even more than 8 schools. I'm seeing a lot of students applying to 10 schools this year and more. And the reason for that is because they haven't had the opportunity to visit schools. So they feel like they've got to get a number of schools to apply for this year. So if you're applying to about 10 schools, you probably have at least 4 to 5 different financial aid deadlines. Then you might have early deadlines for early action, regular decision, but you're going to have a whole bunch of different deadlines. So the key for the FAFSA form is to make sure you get it in by the filing deadline for the school. So the earlier the better. Somewhere in October will probably accommodate all the schools that you're applying to. So that is one of the reasons why I say the earlier the better. Now the FAFSA form, you're going to hear it called everything, FAFSA, FAFSA, everything. So it is all the same form, and the actual term is FAFSA, and it stands for Free Application for Federal Student Aid. And the key there is free. And I say this because you don't really need to pay to get this form filled out. Again, we're a free service, and we can help you with the form, but you can also tackle this form on your own. It's a fairly simple form, and they've really simplified it because now they connect it to the IRS, and you're able to transfer your taxes onto the FAFSA. So the form itself shouldn't take more than a half hour. And if you find you're that person who's lingering for 3 weeks, folks, I would wrap it up and call the College Planning Center. Because there's definitely no need to spend that much time on it. Thanks, Kyle. The next slide would be great. So what does the FAFSA form do? A lot of people also think that once they fill this FAFSA form out online, because it's filled out online and it's filled out every year that your child attends college. But everybody thinks that when they submit the form, it's going to come back and give them the amount of money that they're going to get for each individual school that their child applies to. Okay, that's not the case. Any money that comes as a result of the FAFSA is going to come later on after your child is accepted, and it comes in the form of a financial aid award letter directly from the college. So here's what the FAFSA does. The FAFSA form, once you input all this information in front of you online, it determines, it comes, once you submit it, it gives you what we call an expected family contribution, right? An expected family contribution is how much the federal government determines that you can contribute to, as a family, to your child's first year or 1 year at a time education, okay? And it is these factors that determine this expected family contribution. So the first thing that you're going to use is the students and the parents' prior year income. So if you currently have a senior right now, you guys are going to be working off the 2019 income taxes. All right, so if you're juniors, then next year it's 2020 income taxes. All right, so students and parents' prior year income go onto the FAFSA form. All right, if your child doesn't work, it works, but doesn't have taxes, just report what they earn. Don't worry about taxes or whether they filed. Okay. The second piece that is factored into the FAFSA is the value of the students and the parents' assets. And when I'm talking students' assets, parents' assets, I'm talking stocks, bonds, mutual funds, CDs, additional homes, and 529 college savings. Those are the pieces that are considered assets, and of course, cash accounts, savings checking accounts. That is considered assets for both student and parent go into the FAFSA, okay? The other factor that determines your expected family contribution is the number of people in your household. So if you're a family of 6 and you're going to have more mouths to feed, perhaps your expected family contribution would be lower for the same family who was a family of 3 and made the same amount of money. Okay, the more mouths you have to feed, the lower your expected family contribution. Okay, another determining factor for your EFC is how many people you have in college. So, for example, a lot of you will start off sending 1 child to school this year, okay, and your expected family contribution, say it's $20,000. Next year, if you send another child to school, it's going to essentially be split in half amongst 2 kids. So next year, when you're sending the second child to school, you're going to be filing 2 FAFSA forms, and where your expected family contribution might have been $20,000 year 1, it'll be $10,000 year 2 for 1 child and $10,000 for the other child. So essentially, the expected family contribution stays the same, but it's divided by 2 children. Okay. So because of that, people are always asking me, should I file the FAFSA form? There's a couple things we've learned from the year of COVID. Number one, we never know who's going to keep a job, who's not going to keep a job. And I think Ellen from Providence, who's on our panel, can attest to that. Things have changed considerably. So what happens now is some people will say, you know what, I don't want to fill out a FAFSA, or I don't need to fill out a FAFSA, or everyone's telling me I shouldn't because I make too much money. But what happens down the road when you don't have a FAFSA filed with that school, you've got to sort of scurry around and try to figure it out. So for that reason, I would absolutely encourage everybody on this call today to, at least for year one, make sure you file a FAFSA form. And if you have two in school, I would absolutely file a FAFSA form. You never know how much money you're going to get. Okay, and then the final piece of the that is factored into the expected family contribution is the age of the older parent. Okay, the closer you are to retirement, the lower your EFC is going to be. Okay, the great thing about the FAFSA, I'm not going to lie, when you guys fill out your FAFSA form and you submit and that number comes back as your expected family contribution, I have never once heard a family say, yay. Okay, it's never an awesome number. People never love the number. All right. But once you get older, as you get closer to retirement, your expected family contribution gets a little bit better. So that's one of the good things about being an older parent, sending your kids to school. Okay. Couple things you have to remember when you fill out the FAFSA form, and it's not on a slide, Kyle, so don't change it yet, but I want to say a couple things. Number one, we talked about parent and student prior year income going on the FAFSA. If you are a married couple, both parents' income should go on the FAFSA with your child. However, that is not always the case. There are many times where people are filling this out as the custodial parent alone. All right, so if you're in a divorce situation, the person who files the FAFSA is going to be the custodial parent. That means the parent who provides more than 51% of the support, okay, to the student, all right? Usually, a pretty good indication of who the custodial parent is the parent who pays, who gets child support. If you're getting child support, you are probably considered the custodial parent. If you have a child that goes to school in the district to which you live, that you are probably the custodial parent. There may be a situation, and everybody tells me this, they'll say in a presentation, well, we both have 50-50 custody, and we both live in the same town that the child goes to school in, so there's truly no custodial parent there. Well, trust me when I tell you, the financial aid office will find that custodial parent somewhere along the way, all right? So if you believe that it's definitely 50-50 and there's no determining factor that makes one parent stronger than the other with respect to supporting the child more, then you can make the decision on who is that person. But please be aware that the financial aid office may address that issue if they believe that the custodial parent is the other parent. Okay, so the next slide. So what happens with this expected family contribution? Well, here's the deal. Every school has what we call a cost of attendance, all right? They have room and board, tuition and fees, books and supplies, and transportation. This is what we call our cost of attendance. It's a budget. Each student will have their own cost of attendance, all right? So what do we do with the FAFSA, the EFC, the cost of attendance? How does the school determine how much money they're going to give you? Next slide, Kyle. All right. The school takes your total cost of attendance for a student. Say your child is a freshman, they're living on campus, and they're a full-time student. Let's use URI for an example. Say URI's total cost of attendance based on all those factors that I just told you is $30,000. And then you guys did your FAFSA form, and when you submitted it, it came back and said that your expected family contribution was $20,000, okay? If you take the cost of attendance of $30,000, subtract out your estimated family contribution, the difference between the 30 and the 20 is $10,000. So your financial need at that particular school, for the sake of this conversation, URI, is $10,000, the financial need. And URI or any school will try to fill your financial need to the best of their ability, okay? Now, bear in mind that schools unfortunately are not able to always fill your total financial need. So in addition to your expected family contribution, there's probably also going to be a gap. And that is something that, in addition to the EFC, you have to fill, okay? Okay, I'm sure this is as clear as mud, guys. I know this gets a little muddy, but you have time at the end certainly to ask us questions. Next slide, Kyle. how to apply for the FAFSA form. And then next slide. You have a couple of steps. Number one, before you even apply for the FAFSA form, you have to obtain what we call an FSA ID. All right, this FSA ID is simply your electronic signature, and it's a way to get into the FAFSA, okay? And you're always going to go into the FAFSA with your child's FSA. All these acronyms, blah. So both parent and child have to get an FSA ID, and I always encourage them to do that before filling out the FAFSA. And you guys can text FSA ID to 24,000, and we have a little video, and it'll give you step-by-step instructions on how to do that, okay? All right, so when you get your FSA ID, you're going to complete the FAFSA, and you have to, if any school that you want any financial aid from, you have got to fill out the FAFSA, okay? That is the first thing you want to do in getting any financial aid, all right? So FAFSA website is fafsa.ed.gov, and you can begin filling it out after October 1st of every year, all right? But it's not necessary, like I said before, to fill it out on October 1st. You've got a little bit more time before you hit deadlines, right? And then another thing you want to do, and I can answer questions. I'm not going to elaborate and go into the CSS profile, but it is another additional financial aid form that a lot of private schools will use. And the reason they're asking for additional information is they want a deeper look into your financial situation. For example, in Rhode Island, the 3 schools that use the CSS profile and the FAFSA are Brown, RISD, and Providence College, okay? Now, FAFSA and profile usually will have the same deadline at the school, so if you need help from the College Planning Center, you would book your appointment with us for both forms, okay? Absolutely pay attention to financial aid deadlines. They're key. Okay, next slide, Kyle. Okay, so guys, that's it for me. To book an appointment at the College Planning Center, you've got to call us on our 736-3170 number. But also, in addition to these slides, I have a whole presentation on financial aid. So if you're interested in getting a copy of that presentation, please text my name, Stacy, to 24,000, and you can get that financial aid presentation, and it'll elaborate a little bit more on what I've already discussed. Okay, great. I look forward to answering some questions at the end for everybody.
Stacy, thank you. That was terrific as always.
Thanks, Charlie.
And now I'd like to turn it over to Ellen from Providence College. And she's going to fill us in on the real world. And they have been, all the financial aid offices have been just so busy this year. So thank you for all that you do for students and families, Ellen.
Thank you. Good evening, everybody. Thank you for joining us. As Stacy and Charlie have mentioned, this year has been a year like no other. I've worked in financial aid for many, many years in the financial aid field, and there's just a few things I'd like you to walk away with an understanding with tonight. Is filing the forms and paying attention to deadline is so important, especially in this year 2020. Deadline, as an incoming freshman, your students are seniors, or a lot of your students are seniors. So every school is going to have their own financial aid deadline. Please don't make any assumptions as to what the deadlines are. One school may have one very early. One school, maybe you'll find that state schools usually have the deadlines a little later. Privates tend to have them a little earlier. The deadline can also differ depending on how your student applies to the school. You may have heard a lot of things about early action, early decision 1, early decision 2. All of these things could change your timeline for applying for these forms. As Stacy mentioned, there's only 3 schools in Rhode Island that use the CSS profile in addition to FAFSA. At Providence College here, we do use the CSS profile. And just for example, a lot of students who are applying early action, their deadline is tomorrow. So that comes up pretty quick. So talk to your students, have conversations with them, have a little checklist, and like I said, don't make any assumptions, just write down what the deadlines are and how your student applied to those schools. and make sure that you get the forms in on time. Also, as a follow-up with getting those forms in on time, sometimes schools will ask for additional information, more than just the FAFSA or CSS profile. For example, they want to know if you own a business, and if you have a business, possibly your business tax returns, because that's considered to be an asset. We want copies of W-2s, taxes. So all of these notifications will go out to your students as they get their acceptance of their communications to the schools. And as a parent of 3 teenagers, I would just highly, highly recommend that you make sure that your information is somehow tied into theirs. Either there's just a separate email that you have specifically for college communications that you can check as well, just to make sure that these important forms or these important deadlines are not missed. Why are the deadlines so important to us is because we're given a finite amount of money, and we want to help as many families as possible. So if we don't know who's filing or what to anticipate, we really don't know how we can maximize the funding that we have to assist as many families as possible. So when we have that deadline, what we do is we know who's filing, what the level of need is, and we can then determine if we can increase or if we have to decrease the amount of funding that we can offer families. So make sure you get those forms in on time. As Stacy says, it's really important. It takes just a few minutes to fill out those forms because you never know if something happens. You may not utilize the aid right now, but if further on down the road, something were to happen and you miss that deadline, some schools would not be able to assist in giving you need-based assistance. So even if you get the forms in, just get them in. If you don't want to utilize the aid or the loans, you don't have to use them. Also, as an aid professional, it's so important to understand that we're here to help. And we really want to, have our community, our schools, our students, and assist them in any way possible. So if anything ever changes in your household, like this year, many families have seen so many changes, communicate that to the office. Give them a call. I know a lot of times the information can be sensitive, but that's what we deal with. That's what we do. And just have a discussion with us, talk to us. There may be something that we can do to assist the student, even though it may not have been reflected in the forms. I'm not going to take too much of your time. I know you probably have a lot of questions this evening, and I'm good.
Ellen, thank you for that great advice. And I bet you there will be a few questions at the end. Now we'll turn to Brad McGuire, our CPA in residence here, who can fill us in on the quite good variety of tax opportunities there for higher education expenses and student loan interest. So, Brad, welcome and educate us.
All right. Thank you very much, Charlie. And tonight I do have the pleasure of talking about everybody's favorite topic of taxes. We could just sit and talk for hours and hours, but I promise I won't. We will talk tonight, though, about good taxes. These are tax benefits. These are things that you can use, and these will help you pay for college. So, Kyle, if you would advance the slide, and we'll go ahead and get past the disclaimer. So really, we want to talk about 3 types of benefits that are in the tax code, written in the tax code, to benefit students, parents of students, and help them defer and lessen the cost of an education. And I've divided them into 3 different types. First are credits, and credits are basically dollar for dollar reductions in the amount of tax that you owe. Whenever I advise clients, I'm always telling them credits are better than exclusions or deductions. So if we can qualify you for a credit, let's make sure that we're doing so. And then the other 2 types are exclusions, which are areas where things that are typically going to be income are excluded specifically in the tax code so that you don't have to pay taxes on the income and the earnings that you receive. So that's another good benefit. And then finally, a deduction, which is where we are lowering your adjusted gross income by deducting part of the cost of an education. And so with that background, we'll go through and we'll talk about some of the credits, exclusions, and deductions that are available out there. So in 2009, these tax credits were added to the tax code, the American Opportunity Credit and the Lifetime Learning Credit. And we'll go into a little bit more detail of those in the coming slides. But these are the two that are out there. Both provide very, very good benefits. Typically, if you can apply and get the American Opportunity Credit, and again, these are filed when you file your individual tax returns. So when you file your 1040, personal preference, make sure that you have a good, solid tax professional and a good CPA who's helping you with these, because this is a very complicated area of tax law. There are a lot of planning opportunities and a lot of ways that you can take this and maximize the benefits that you get. And we'll talk about a few of those, but there are a lot of them out there. There are a lot of tripwires that you don't want to step on as you're coming through these credits and deductions. So, Kyle, if you would go ahead. First, we'll talk about the American Opportunity Credit. And one thing I wanted to point out, and again, we all deal with teenagers and we know that they don't give parents things. So one thing that will happen is the school will provide a 1099-T. That may be electronic, it may be to the student's account. They may have to go out and download it and print it for you. Make sure you're getting that to your tax professional, because that's the information that they need to qualify and to calculate these credits and deductions, a lot of them anyway. So first, make sure that you're getting that. And that's regardless as we talk about everything else tonight. So ask your student. If they don't have it, tell them to log on to their student account and download it and print it for you. So to qualify for the American Opportunity Credit, a student must be enrolled at least half-time. This is an undergraduate credit only, so it's limited to the first 4 years, and that includes if your student goes 5, you can only claim this credit for 4, even if that's how long it takes them to get their undergraduate degree. The credit is up to $2,500. Of the first $2,000 in tuition and fees that you pay, 100% of that is going to be credited back to you. So again, this is a really nice benefit, especially for community college and so forth, where your costs are lower. This is getting you a high percentage of that back. The second $2,000 is a credit of 25%. So again, a nice credit there that we're able to get for taxpayers. So what is eligible? Tuition fees, books, supplies, equipment, those type of things are all eligible for this credit. So make sure you're keeping track of that. That will not be under, all of that will not be on your 1099-T. The 1099-T will show your tuition and fees. For certain taxpayers, it is a nice benefit that this is refundable. What that means is that if you don't have a tax liability equal to or greater than the credit, up to 40% or $1,000 of the credit can be refunded to you as above and beyond your tax liability. This is a credit that is limited, as are all of the credits, limited by your income. So this begins and is totally phased out for single taxpayers at a level of $90,000 of adjusted gross income and $180,000 for married filing joint returns. It is claimed on the taxpayer's return who claims the student's exemption. So that may be the parents or it may be the student, depending upon whether or not that student qualifies to be your dependent or not. If they are claimed on your return, you are the one that can claim the credit. It doesn't matter necessarily who pays the expenses. It matters who claims the exemption. The second credit that I mentioned was lifetime learning credits. And this is a credit up to $2,000, computed a little bit differently, 20% of tuition and fees. And notice only tuition and fees here, so this is a smaller bucket of expenses. This one is intended for students of any age, any level, for any tuition and fees that they pay. It does not have to be a degree program. It does not have to be undergraduate. but it is a lifetime learning credit. And the senator mentioned, encouraging lifetime learning, and this is one that Congress put in, and it really benefits everybody, regardless of the level of education. This one, however, none of it is refundable. It can only offset tax that you have. It does not carry forward, nor do the expenses. It also has income limits, and you'll notice that these are slightly lower. It is phased out totally for single taxpayers at a level of $68,000 of adjusted gross income and $136,000 for married filing joint return. Same rule applies for who claims this. This is claimed by the taxpayer who claims the student's exemption. The second area of benefits that the tax code has in it is exclusions. And the credits, like I said, those are dollar for dollar reductions in tax. So you take those credits that you compute and they directly offset the tax. Exclusions mean that typically the rule of thumb in the tax code is if you receive income, it's taxable. If you receive funds, it's taxable. So what the code did was it excluded very specific areas where we're going to say, okay, this is for the benefit of society. So we are going to exclude this income. So grants, we talked about the Pell Grant. Private grants that you might receive that are used for education, those are able to be excluded from your income. You do have to be a candidate for a degree. The amount cannot exceed the amount of qualified educational costs, and those are basically your tuition and fees. Cannot be designated for other non-eligible costs, and we'll talk about this. If you receive a scholarship and it includes room and board, that scholarship for room and board is taxable, and it must be included in your income. If it's used for tuition and fees, then it is not. And that's an important feature as we look at some of the other aspects that we have coming up. So kind of keep that in the back of your mind. Also, it cannot be a payment for services such as teaching or research. If you're doing something to receive this, then it's not considered by Congress to be a scholarship. It's considered to be compensation. So that is going to be taxable if you're teaching classes. Those are going to be taxable income. There's no income limit for this, but it is something that it is typically at the student level and not the parent level. So again, most of our students are under the income limits that we've talked about. The second area where Congress has said we're going to let you exclude some things that would typically be income or in the Coverdell and the 529 plans. Now, keep in mind, these are basically savings accounts that you're able to put money aside and save for college. So the sooner you get going on this, the better. Most of you have students who are coming into school this year. You won't get a lot of benefit from this, but if you have some younger siblings of those students, start putting some money into these because you can earn money that then you don't have to pay tax on. So contributions are made. There's no deduction on your federal return. You do need to tell your tax preparer that you made them, because in Rhode Island, you can deduct $500 for a single taxpayer or $1,000 for married filing joint returns on the Rhode Island return every year. So those are amounts that you can deduct. So it's not only an exclusion that we're talking about, but a deduction from your Rhode Island tax. Distributions that are used for expenses related to enrollment or cost of attendance are tax-free. So what happens is you put this money in, and over the years it grows, and you can invest this in however you see fit, just like you would with an IRA or any other type of investment account. You invest that, it grows over the years, and when you draw that out, as long as you're using it for qualified expenses, the earnings that you have over the 10, 15, 20 years, while that's growing, are not going to be taxed as long as they're used again for qualified expenses. So start early, allow those funds to grow. Obviously, for those who are going into college, it's a little late for that, but for the younger siblings, can be used for more than tuition and fees. It can be used, this is one of the few areas where the tax code says these funds can be used for room and board. And that is kind of going back kind of keep that in the back of your mind because the other expenses, a lot of them, or the other credits and deductions don't allow you to get any benefit from the room and board. If you pull money out of those accounts and you didn't use it properly, you didn't use it for expenses, then there is a 10% penalty, just like there is on an early withdrawal from an IRA. Now, we were talking about this one earlier, and a lot of grandparents love to give their grandkids Series E bonds, and so people have these Series E bonds stacked in lock boxes and in drawers all over your house. Well, one of the benefits from those is that for Series EE bonds purchased after 1989, if you cash those in and you use the proceeds again for tuition and fees, then the interest that's earned on those bonds is excluded from income. So I gave bonds to my kids from my parents, and they're like, "What are these?" Well, they get to cash them in. They get to exclude the income as long as they're using them for tuition and fees, and that's a nice addition to the earnings that they've had with those bonds over the years. Again, income limits apply to this. It's phased out for single taxpayers above $97,000 and for married filing joint returns above $153,000. Another area where Congress has said income can be excluded is when the employer provides education assistance. So a lot of employers nowadays use this as an amount above and beyond the salary or the hourly earnings to trigger people to work for them. And what it says is that students exclude up to $5,250 of employer-provided assistance per year. To do so, the employer has to have a written plan, so there has to be some planning in this. It's not something that you as the taxpayer or the parent of the student can necessarily do. But if your student's working somewhere and they had this plan, or if you had this plan, it is a great way to pay for some college. The benefit must be used for tuition, fees, books, supplies, and equipment. Again, you see that definition changes a little bit. And so that, again, is part of the complexity of this and why I highly recommend a qualified CPA help you. Does not have to be work related. It does not have to be something that you're doing to get a degree. It just has to be something that is under and qualifies under your employer's plan. And then the final section is the tax deduction. And so this is an area where you've spent the money, and the IRS or the Congress has provided in the tax code to allow you to be able to deduct a part of that. And so the tuition and fees deduction says that you can deduct up to $4,000 on Schedule 1 of your 1040. Again, just tuition and fees. And this is also phased out at $80,000 for single taxpayers and $160,000 for married filing joint returns. Expenses are for the taxpayer, spouse, or the dependent. So again, these are the deduction goes and follows where the dependent exemption lies. Student loan interest, and again, part of this seminar is to help you avoid this part, but everybody, it seems, has a little bit of this, and Congress has said we're going to allow a limited deduction for student interest that you pay. And so a taxpayer can deduct up to $2,500 of student loan interest, provided that you meet the income limits. The loan must have been taken out solely for qualified educational purposes. So you have to make sure that this is a loan that was originated solely for educational expenses. Again, you'll get a 1098 from the bank that should supply that, as long as they have the information that that's what this was used for. This deduction is also phased out. Phases out at $85,000 for single taxpayers and $170,000 for married filing joint taxpayers. Notice that all of these income limits are different. And if you ever want to look these up and help yourself sleep at night, IRS Publication 970 gives you all the details. I don't recommend it. It is not a good read, but it does provide all of the details for you. And then the final point, Kyle, on my slides, Congress is pretty wise that they see there's a lot of overlap in these deductions and credits. You can't double dip. So what does that mean? That means if you take the American Opportunity Credit, you can't take those same expenses and say, well, I pulled money out of Series E bonds and I pulled money out of my 529 and we used all of that and we paid the tuition and fees. So if you exclude income, then you can't take the credit. If you receive a scholarship, then you can't take the credit for the scholarship fund. So again, this is where it's important to do some planning and really sit down and talk with your tax preparer and make sure that you understand the ordering rules here and what things can be used for and what can't. There are some tax opportunities out there to do some planning, sitting down and having a conversation with your CPA is definitely a good idea. So, Kyle, I think that's what I've got. Thank you very much.
Thank you, Brad. We're now at the point in this session where we'd open it up to questions from the attendees. And Kyle is going to help us navigate that. And
yep.
So take advantage, everyone, of having these experts here to assist you. And Kyle, will you let us open things up and we'll start to hear from folks, hopefully.
All right, so we have a question from Dina Dufisi. I apologize if I'm mispronouncing the last name. I'm going to unmute you now and you can ask your question.
Sorry, I didn't mean to raise my hand.
Oh, that's no problem. I'm just going to move right along then. All right. My next question comes from Lori. Lori, you're unmuted.
Oh, me, right? Okay. I had a question about international schools and financial aid. I don't know how much of this applies to international schools.
Well, I would think I'd probably ask Stacy to address, what kind of aid and so forth, but there are federal and private loan programs that if it's a qualified institution overseas, you can take those with you in some cases as well. Stacy?
And actually, Charlie, that's the answer. So not all schools will accept the FAFSA form, but so I think the best thing for you to do, believe it or not, is you're going to have to go on their website. A lot of schools in Canada will not only accept the FAFSA form, but believe it or not, the CSS profile form. So it's very school dependent. More and more are becoming, are starting to use the FAFSA, but still not a ton of schools. You'll have to probably address the school directly.
Lori, does that answer your question?
It does. Thank you very much.
Sure.
Awesome. Thank you, Lori. If anyone else has questions, they can raise their hand in the participants section. Just click on your name and there should be a button to raise your hand and I can call on you. All right, I have Mike. I'm going to unmute you now, Mike.
So we have a junior. When should we start the whole process?
Hey, Mike. I would say you're junior. Have you started looking at schools at this point at all?
A little bit.
Great. Okay, so it's kind of hard for you guys because we don't know where we're going to be in the spring. So I think I'd spend a little time, starting now, looking at schools, going to some online college fairs when they become available.
Okay.
But with respect to, coming on in and seeing us or speaking with us over the phone, I would say in the spring.
Okay.
Okay, great.
Thank you.
You're welcome.
All right, next I have Lori Hayden. I'm going to unmute you now. Lori?
Hi, yes, my question is the income limits where it gets phased out, the person who spoke most recently, are those gross income or adjusted income?
It's the adjusted gross income, but it's not net of your withholdings. It is the AGI adjusted gross income is a line on your tax return, and that's what it uses to compute whether or not you are eligible.
Mm-hmm. Okay, thank you.
Thank you, Lori. Next, we have Kimberly. I'm going to unmute you now. Kimberly?
Thank you. I was just wondering, so if we already applied to one of the schools that my daughter was interested in because the deadline was there for the application, but we didn't do the FAFSA form yet, is that a big problem?
You know what, Darrell and I could answer this. You know what, it's a simultaneous process. So what typically happens is a lot of people get nervous that because their deadline for admission is so early that the financial aid deadline really is early. Oftentimes, the best thing for you to do is to look on that school's website under financial aid and see what their filing deadline is. But the process is simultaneous, so just check the deadline.
Yes, I agree. Speaking from where I've worked, the financial aid deadline usually falls within about 2 weeks of the application deadline. So again, back to where we were saying, it's dependent on whether or not your student's applying regular decision, early action, or early decision. You want to go back and check each individual school's website and see what their key dates are for your student's application and how they applied.
Yes.
So if we missed the financial aid deadline for that school for early action, it's not too late for just regular admission financial aid, is it?
Well, if your student applied early action, then you would want to get it in as soon as possible. Even if you pass the deadline, you definitely just get it in as soon as you can.
Okay.
There are sometimes that they'll extend. I know with this past spring, we had to extend a lot of deadlines, especially for students who were returners, because the returner deadline is in the spring. And because COVID hit around then, there was some wiggle room there. But try to get it in on time. If you don't get it in on time, as soon as possible, the closest to the deadline that you can.
Okay, thank you.
Thank you, Kimberly. Grace, I'm going to unmute you now, Grace.
I have two questions. One was, how do you access all the scholarships that are out there? Like, how do you is there a bank where you could go and find out what is available to apply for scholarships? And then the other question I had was, once I have financial aid, how do I apply for the work study?
Grace, I'll handle the first part, if you would, on the scholarship end. For Rhode Island, if you're a Rhode Island resident, there's rischolarship.org, which has a number of local scholarships that you more likely have a better chance of actually getting one of those if it applies to you than some of the big national scholarships. But you should also take a look at the national scholarships. College Board has one where you fill out sort of a profile about yourself and what you may be doing and where you're from, who your parents work for, things of that nature. And then take a look at the resources that your high school has. Many of them have ring binders or online resources of scholarships that they've accumulated over the years that may apply primarily for students in that area or even at that high school. So there's quite a few of them out there. Some of them aren't big, $500 to $1,000, but if you're able to accumulate a number of them, every bit helps.
Would you need, would you need to apply every year for those scholarships? Is it 1 year only?
Most of them are multiple applications every year. There are a few that I've seen that do, have longer term grants, but I think those are definitely the exception. And the other one, again, are you from the Rhode Island area?
Yes.
The Rhode Island Foundation has a number of scholarships that people that have donated money in memory of loved ones or for particular programs, they have a good listing of scholarships as well. Now, your second question, Ellen or Stacy, would you like to take that one?
Yeah,
go ahead.
Yeah, so I actually oversee the whole student employment program here at Providence College. and it's considered to be a need-based award. So what you'll see on the Students Financial Aid Award is whether or not they've been awarded federal work study. So there's no separate application. It's applied through the FAFSA, and every school will just automatically evaluate you for it. And if the student is eligible, it should be posted on the Financial Aid Award.
And Ellen, if you could just elaborate, how would they go ahead and find a job once they are awarded?
Absolutely. So every school's different, but how it works where I work is there's a portal, a jobs portal, and it's really student-driven. We don't assign students. A lot of schools don't assign students. They let them apply for jobs that are posted in the jobs portal on the school's website. And the student applies, and it's just like a regular job. They might have an interview, and it's up to that particular department to hire the student. You're probably not going to find any job postings for each school probably until late summer. Probably around early August is when you'll start seeing job postings going up. And at that point, the student will have enrolled at their school, so then you can take it from there. Whatever school they decide, you would talk to them about getting him or her in the federal work study program and getting them to work.
Great, thank you. So my next question comes from Ola. I'm going to unmute you now.
Thank you.
Did I pronounce that right?
Yes, you did. Thank you.
Great.
Yeah, so my question is, I have my daughter, she's in 10th grade, and I'm kind of confused about the FAFSA, when to file the FAFSA form. So I'm not sure like what year's taxes I would use for that. So I was wondering if you could please help clarify that.
Well, she can help you on that, our FAFSA expert.
Oh, okay. So let's think about this. So she's a sophomore in high school now, right?
Yeah, she's in the 10th grade.
Yeah. She would be, when the time comes, which will be her senior year in high school, you will be working off of 2021 taxes.
Okay.
So good for you, being very early. That's awesome. But you can go to about probably 3 more of these presentations and become a pro by the time you actually have to fill out the form.
Thank you.
You're welcome.
Thank you all. All right, next I have a question from Eric. Eric, I'm going to unmute you now.
Hi, Eric from Portsmouth. I had a couple of questions, but my first one got answered. The second one is I'm a military retiree, and I have the GI Bill and was able to give it to my kids. And I have 36 months of eligibility, and I'm figuring that'll cover both of them for the first 2 years.
Wow.
But I don't know if I should cover one with the GI Bill and then take out student loans for the other, or I'm not really sure how it meshes with the financial aid. Over.
Stacy, you have a special expertise in this, your son.
You know, I kind of don't, because I never had to use that. But, you know, it's so funny. The GI Bill is always such a funny area for all of us. Here's what I would recommend for, is your child a senior now?
No, they're freshmen.
They're freshmen in high school.
Yes, ma'am.
Okay. There's 2 things that I would do. I think that's a hard question, because you're going to have to sort of monitor the rates of the loans. Okay, so if you have a GI Bill and you can cover, the first 2 years for your kids, that's less interest you'll have to be paying in the end. But at the same time, you've got Rhode Island Student Loan Authority who, offers a 3.99, immediate repay. So I think you're going to have to keep an eye out on the loans, Eric. And then I think when the time comes, you're going to have to, there's an office within the college that will help you very specifically with that question. That's a tough one. And also the other thing I would recommend for you is to reach out to Senator Reed's office, to John Kiernan. He's a terrific resource in Rhode Island for people who are dealing with the GI Bill. But the school is going to be a good resource for you going forward. I wish I could answer that question, but I would say monitor the rates of the loans when your children get there. But good for you for taking advantage of that, because you know how many military people miss the boat on that GI Bill, Eric. So great job, and Thanks so much for your service.
Thank you. Hey, Stacy, how do you spell Kiernan? K-I-E-R-N-A-N?
Yes.
Eric, you have my email. I sent you an email before this event started. Feel free to reach out to me directly, and I can connect you with John Kiernan.
All right. Thanks, Kyle.
And Eric, make sure your kids are also interested in maybe ROTC or the academies, and then you are in a good place all around.
All right. I'm going to move on to our next question coming from William. William, I'm going to unmute you now. William?
Yes, thank you. Very, very informative. I can talk to Eric offline. I have a freshman at URI, and I just did the GI Bill and had some of the same concerns. 2 questions. I'm going to have 3 in college in 2022. And
my condolences. All right.
Yeah. And so I understand a FAFSA for each of them. So I just an administrative question. Is the FAFSA cut and paste? I did it once, but I can't. Is this going to be an easy process, or is it going to be a long process for all 3 of them? And then the second part of that is really related to the CSS profile. What is the cost for filing the CSS?
Yeah. So easy peasy for you. This is great because once you fill out 3 FAFSAs at a time, they're all connected to each other. Once you finish one, it says, do you have a brother or a sister? Yes. And then it takes all the information from the first FAFSA. So will be easy. You will have to get 3 separate FSA IDs for each child. You as a parent will be able to use the same FSA ID. And then as far as the CSS profile, it's $16 per school for each school that requires the CSS plus a $9 registration fee.
Okay, great. Thank you.
Welcome.
All right. Thank you, William. That brings us to the end of the questions, I think, unless anyone else has any last-minute questions. All right. Seeing none, I just want to thank all of our panelists, all of the great questions, and thank you everyone for joining us. I know this isn't our typical format, but I'm glad we were all able to continue the tradition, and I appreciate it. Everyone who registered for the event, you received an email from me. You will be receiving another email after this event containing the slides, so if there's particular information you need out of them or hyperlinks contained in them, they will be sent to you shortly. This entire presentation and panel discussion will be available on Senator Reid's website after the event. And if anyone has any questions, please feel free to reach out to me or any of the exemplary panelists we have tonight. And I want to thank them for taking the time and joining us tonight.
Kyle, thank you for hosting this, and please thank the Senator for continuing this tradition for us and for the people of Rhode Island.
Absolutely. All right. Well, thank you, everyone, and have a good night.
Thanks, everyone.
Bye.
Good
Thank
night.
you.
Good night.
Good night.